Hey there, everybody. Thomas Wood with ValueCharts.com. It is Wednesday, October 28th. We're going to take a look at crude oil, and more specifically, a trade that we had in the trading room, futures trading room earlier today. That actually worked out really, really well, and that was in crude oil. And that was a long setup, and it was right before, about an hour before, or about 30 minutes before our news at 10:30 of the petroleum status report. So what we were looking at with crude was what we call an inverted head and shoulders. So a lot of people know and have heard of what a normal head and shoulders is. Well, an inverted head and shoulders is just the same thing, but upside down. And you look at it, we had left shoulder, head, right shoulder. And you can see these dots on here that we have connected by lines. What these are doing is this is the MQ pivot trend indicator that'll be coming out later this month, or not later this month, early next month. And what that's doing is it's pointing out the pivots for us to identify trends. So if you have higher high plus higher low pivots, it'll be an uptrend. Lower high plus lower low pivots, it'll be in a downtrend. But either way, we had the inverted head and shoulders. The long entry was on the break above 43.78. The reason this was a good trade is because you had bullish momentum on your 30s and your 60s and your 120s. And then you also had bullish momentum on the inverted head and shoulders on the 502-minute chart where you could see it. It ended up working out really well. And you'll notice when you're trading these types of breakout patterns, inverted head and shoulders, normal head and shoulders, a pennant, a break of support or resistance. When you're trading a breakout, the market should run right away. Okay, and that's exactly what happened here with crude. You see, you get in on the break above 78, right at about 80, 81, depending on slippage, and then it moved immediately your direction. Momentum stayed very bullish the entire time. It did what we call a bull flag, and then ripped higher and just continued to spike. And if you go look at what crude oil ended up doing, we ended up having not only this inverted head and shoulders for our entry, but we had this big rip higher, and then we did what we call a micro downtrend, where we come up and we put in a lower pivot high within the context of an overall uptrend. So what do? We draw a trend line across that lower pivot high, and that's your next entry. And that was right at 44.5, 44.52, 53. That worked out really, really well. I know a lot of people in the trading room were able to take that and take advantage of it. And that ended up ripping all the way up to 45.20. And we continued, and you look at our pivots continue to put in higher highs and higher lows all the way up until we got up here, where we formed another micro downtrend within the context of an overall up move. What do? Same exact thing you did with the last one. Draw a trend line. Your entry, and we talked about this one in the trading room as well, was at 45.48. And then once again, it ripped straight up, and we said trail your stop all the way up to 45.80, just below this low here. So you had another $500 a contract worth of a move, and then once again it went back into consolidation. And by this point we were up $3 from the low basically, so it was time to stop taking longs. And so far we've just gone to consolidation. Now we did just have FOMC, and crude's pulled back a little bit off of FOMC, and actually we're starting to break down, have a little bit of support here, but we'll see how it ends up playing out through the end of the day. But all in all, not a bad day of trading. We had several really good trades in indices and bonds, in euro, in crude oil, and in gold, and in copper. So great job to everybody in the trading room. That's all I have for you for today. I hope it helps. I will see you in the trading room bright and early tomorrow morning. And until next time, happy trading.